based on our observation, the Magnificent Seven stocks are weaker than the market, except Apple, which still shows some strength. And potentially this could be because of the DeepSeek. Right, just an important note before we proceed. Whatever we share here today is based on the latest data and also facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor and we do not manage customers' funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decisions and be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. All right, as usual, let's start with the market highlights. So let's take a look on what are the factors that are affecting the current stock market. All right, so according to the recent events, we do see that we have a weaker consumer sentiment data back in last Friday. And also for the services PMI, it showed some contraction in the services sector. And this was the major reason causes the sell-off in last Friday because of the concern about the market, the economy slowdown. Of course, the consumer sentiment and also the PMI is just a survey. I would say the small size of the populations. The consumer sentiment usually is a survey to ask about the consumer part, the end user like us, the retailers. They do a survey to check the consumer sentiment. And for the PMI, which is a survey to the purchasing managers in the relevant industry, for example, services industry. So this data has shown that potentially there will be some slowdown according to the consumer sentiment and also the purchasing managers' opinion. So market do concern on that, and we see a sell-off last Friday and also yesterday. Other than that, we also see that Trump's tariff caused some trade uncertainties in the market. And at the same time, we do see there is some worries about inflation as well. The inflation has been hitting 3% figures based on the last month data. So 3% inflation do cause concern on the market. However, the market do reacted positively at first when the data was published. This is because the consumer, I would say the inflation expectations was high prior weeks, around 4.3%. Hence, the market reacted positively when the inflation was 3%. But the market sell-off after all-time high, at the all-time high resistance, after hit the all-time high, we do see a sell-off because of the weaker consumer sentiment and the services sector contraction. All right, so first of all, the tariff, the Trump tariff. So this was one of the headlines in February. When you take a look on all these CNBC website or all these different market watch website, you may see time to time you see Trump's tariff, Trump's policy on tariff or his trade policies. So first of all, we see that tariff on Mexico, Canada, and also China. However, market do relief after he delayed the tariff on Mexico and Canada. And at the same time, we do see that inflation are back to 3% region now. It was 2 point something in the past. And as we know, the Fed goals was at around 2% goal. The Fed inflation goal always around 2%. They will set their monetary policies according to the 2% goal. But now we are seeing inflation back to 3%, which cause concern. Which cause concern about potential delay in rate cut, or we may see lesser and lesser rate cut this year. All right, so the timing of the rate cut or the frequency of the rate cut may be affected by this inflation data, and the inflation data may continue to rise if we do see more and more trade uncertainties in the market. And based on the survey data about inflation expectations also shooting up to 4.3%, which caused concern as well. And other than that, we do see major tech earnings last week as well. I would say not last week, but early February. We do see earnings report from Microsoft, from Google, from Amazon, from Meta. And all of them are sharing that they are spending a lot in their capex. All right, so when you add up all of this, I think Amazon alone 100 billion USD for their capex in AI infrastructure. And if I not remember wrongly, Meta was around 60 billion or 70 billion. You may need to double check the figures in their earnings news or report. But this actually caused some concern as well, especially if you check on the stock chart for the Microsoft, Google, Amazon, and also Meta. We do see that there's some concern in the stock price itself. They were rallied less, except Meta was still bullish, but now with the sell-off, it's also slowing down. But you can see that after they announce earnings, people are concerning about their high capex, which means that they potentially, if let's say they spend a lot in all this AI infrastructure, people are concerning whether it will erode their profit margin or not. Hence, this caused the stock price are weaker. For example, Microsoft stock price has been in a sideways for some times now because of the concern of the high capex. And Amazon, we do see also move in a range bound or coming down now because of the concern on the high capex. And same for Google and also Meta. So all of these may need to monitor if you are invested in all these Magnificent Seven stocks, especially Google, Meta, Microsoft, and also Amazon. You may need to continue to monitor this part because the market or investor are concerned about high capex may erode their profit margin. And next one, like I mentioned earlier, based on our observation, the Magnificent Seven stocks are weaker than the market, except Apple, which still shows some strength. And potentially this could be because of the DeepSeek, emerge of the DeepSeek model which is from China and is cost less to develop compared to the OpenAI model and also Google's model. And also at the same time, AI competition in the market, because with DeepSeek emerge as an open source AI model as well, this also cause more competition in AI. But with the DeepSeek coming in also, it do boost demand for chips as well, because as we know, for AI or in the AI competition, the more powerful your computing power is, the more powerful you are. So the demand, we do see that the demand for chips may still be there. All right, so with all of these events, we have economic events, we have geopolitical events, trade policies, all these are affecting the market. Let's take a look on the key events that move the market. All right. So first of all, inflation figures is important. So we may want to continue to monitor the inflation figures. Now you already break above the 3% barrier. So if next month continue to go up, or the subsequent few months continue to go up, it may cause more volatility to the market, and it may affect Fed's timing of rate cut, or even reduce their frequency of rate cut. And the next one will be the economic data. Just like last Friday, for example, like consumer sentiment, services sector PMI, or the industry PMI. All these are important economic data because some of them are forward-looking, and despite it's just a survey, but market may take it negatively or reacted to it. Because in the early part, like I mentioned earlier, inflation at 3%, expectation at 4.3%. And market do see a relief, and there's some saying that with high inflation show that people are still willing to spend the money. But with the weaker consumer sentiment survey and also the services sector contraction according to the PMI, market do concern as well, because based on the survey, it looks like it tells us otherwise based on the survey. However, we may want to wait until the actual economic data, for example, those like GDP, to come out before we confirm that the economy is slowing down. All right. And of course, with the tariff uncertainty, with the trade uncertainty around, the market also may react uncertainty. It depends on what Donald Trump or his government officials announce according to the trade policies, and market may react to it. And for now, I think the most recent one, what he announced, will be the reciprocal tariff, which planned to due on April. So April could be another checkpoint whether his policies may cause market to react or not, because he do set a deadline. The reciprocal trade may due on April, and also some of the sector-specific tariff, like for example, 25% on automobile, semicon, and pharmaceuticals, also likely come out in April, because for now he doesn't mention any deadlines for it. But he also mentioned some good news for American companies, for example, 15% tax on tax cut on US made goods, and also tax cuts for domestic oil and gas companies. So we may stay tuned for that, because he doesn't give a deadline, and market are foresee maybe April will be the month that he announced all these policies. And what investor traders can do then in this month, all right? So let's take a look on what we can do. So with the above factors, there's so many uncertainties, and on top of that, February was a seasonal, according to the seasonal pattern, February was not a good month as well. Usually people may sell off after the January earnings reports, early February when you have earnings announcement. Then towards the month end, people may sell off. This is according to the seasonality data. And also with all this uncertainty around, investor may prepare for more pullback. All right, so the market has been rallied since, I think, late 2023 until 2024 was a good year. It's been rallied a lot. So likely the market may correct as the valuation of all these tech stock, AI stock already at the high side. So we do expect, or we do anticipate potentially there will be more pullback in this market. And what investor traders can do is to monitor key levels for all these major indices. For example, what are the key levels or important price level for S&P 500, or what are the important price level for Nasdaq 100. All right, so at the same time, when the market are pulling back, you can monitor strong stocks that are in line with the mega trend. For example, let's say the overall market are pulling back, and you see that potentially some AI companies, or potentially some GPUs company, for example, then you can wait at the strong support level, or when you notice there are some behavioral difference. For example, market are selling off, but your stocks are holding support. That's a stock you may want to focus on. Or you can diversify some of your portfolio to non-tech, because we do see that all these AI stocks or all these AI infrastructure stocks, some of them may already at a very high valuation and potentially may pull back more. So as an investor, you can diversify your portfolio to some of non-tech stocks. For example, if you monitor recently, the consumer staples has been holding the support well, while market are selling off. Same for healthcare stocks as well. So these are defensive stocks when market are in a more volatile mode. So some of the funds may rotate into all these so-called defensive stock or value stocks. So you may monitor some of the non-tech stocks for your own market monitoring. So you can look at, other than tech stocks, maybe some non-tech stocks to balance out your portfolio. All right, Then, as usual, after we go through the high level, what are the market highlights? Today, we have a lot of market highlights because there is a lot of events happens towards month end of February. All right. So for this market update, as we prepared last week, but things changed after last Friday. All right. So I spend more time on the highlights. So let's take a look on the stock market performance as well. So these are the 10 years chart from S&P 500 and also different markets. So let me show all of you the different markets. So first of all is the Nasdaq 100 that track the top 100 stocks, tech stocks in the United States. All right, so Nasdaq 100 track top 100 tech stocks in the United States. And recently we do see a pullback from all-time high. From the chart here, you can see that since 2023 it has been rallied for a while. So we do foresee that potentially there will be more pullback with all these events or factors I mentioned earlier on. And with the trade uncertainties around and also the inflation at 3% mark, slightly more pullback. But even however, when I say more pullback, you may still monitor all these strong stocks, especially those holding support while the market are pulling back. All right, same for the S&P 500. So from the S&P 500, we also can see that recently it start to show sign of losing momentum and start to pull back. And S&P 500 usually track the overall stock market in the United States, the top 500 stocks in the United States. So while waiting the pullback, you may do your own valuation, own study, fundamental study to identify what are the potential good stocks that are worth to consider once the correction or once the pullback complete or find support. All right, so this is the best time for you to prepare yourself with all these great companies in your list, because it's not, the market has been ready for a while, valuation has been high, and it's not easy for you to enter or look at an investment if let's say market are too expensive. So a pullback could be a good thing. Once the market pull back to a good valuation level, funds may come in back again. And if you see some of the stock that holding support, you may consider to plan out some trades or plan out some investment. If let's say you know what you are doing, you have your own systematic way, then you may consider when the market comes down to a reasonable level. All right, then next one, I would say we'll cover some of the China indices as well. This is the 10 years data. Of course, we couldn't see the recent spike, but from here we can see that the US stocks over the 10 years still is the most consistent stock. Most of the branded names are there. For example, all these Apple, Microsoft, Google tech stocks there, and even some of the branding names like, for example, all these traditional stocks like Procter & Gamble's, all these consumer staple stock like even like Colgate-Palmolive, all are from United States. So a lot of brands are from United States. So all these great companies are still from US, and the stock market, based on the chart itself, 10 years data, it still shows us that US still the most consistent market, and most of the growth stock, for example, all these AI great names are still from the US. But talking about China, recently the stock chart has been rallied a lot, and this is because mainly it's a strong tech rally after DeepSeek. All right, so DeepSeek is an AI model from China, and with the DeepSeek development or with the finding of DeepSeek, I would say like with the DeepSeek's launch or topping the app store #1 in back in during Chinese New Year, this bring back confidence that China is still competitive in the AI space. Because in the past, US has been doing a lot of sanctions on GPU sales to China, and people do see that China may be fallen behind in terms of AI competition. But with the DeepSeek event, people do have confidence back in China tech companies, and they do see that all this AI implementation in China using DeepSeek may improve tech companies' EPS in China. And it costs a lot of funds to flow back into China, especially the tech stock, China and Hong Kong market. I would say both region, China and also Hong Kong's tech stock has been see a lot of inflows of funds because of confidence in the AI space, or China still able to compete in the AI space. But currently the market is overstretched, and we may, if let's say you interested in China stock, you may want to wait for a pullback first, because when the stock market is very stretched, the pullback may be steep as well. All right, and before you consider any China position, or before you look at any China stocks, do take note that China economy are still in a recession mode. I would say not recession, but in still very slow. As you can see in the past, they do have property crisis, they have very slow inflation, 0 point something% inflation, and they still have a lot of overhang in their property market, and the economy there still slow. And the other factors will be geopolitical factors. As we know, US and China is in a trade war and also tech war. So more and more headwind, I would say there will still more geopolitical headwinds for Chinese market or for the Hong Kong market. All right, and next one, let's take a look at Hang Seng as well. Hang Seng has been, you can see that recent price action, you can see that it has been rallied. recently, also for China market. And this actually, like I mentioned earlier, because of DeepSeek, investor having more confidence on the Chinese tech stock now. All right, so this have a temporary rally, but like I mentioned earlier also, the stock chart has been very stretched and there could be more pullback. And something to take note is China and Hong Kong market are more volatile because it's strongly influenced by Chinese government or the China government. And this make it more suitable for short-term trading rather than long-term investing. All right, and lastly will be FBM KLCI, our local market here. All right, so in early days last year, especially early 2024, we do see that influx of funds flow into all these AI-related stocks, but now the valuation of all these AI-related stocks on the high side. And last December, we do see some sell-off in Malaysian market as well. And according to the news or according to the news source I've referred to, there are still more and more foreign funds are flowing out from Malaysian market. Potentially going to other markets or going back to the US market. I would say among Asian region now, more funds are attracted to the China region because of the DeepSeek. So potentially some of the funds move to the Hang Seng market to capitalize on the DeepSeek trend. But like I mentioned earlier, the Hong Kong market or China market already at a stretch level. So it's not a good time to take a look on them as well. Need to wait for a more steeper pullback first. So from the overall comparison here, which market provide the most consistent return according to the 10 years overall stock chart? You may answer in the chat as well according to the 10 years chart. All right, so based on the chart, we can see that US, especially the Nasdaq 100 and also S&P 500 index has been providing the most consistent return. All right, so for investors or traders who are looking for high growth stocks or strong fundamental stocks, the US market will have more high growth stock, and also at the same time, they have strong fundamentals data as well. For example, those Microsoft, Google, and also Amazon. So and what are the reason? What are the factors or reason why the US stock market are more consistent? This is likely because of more high growth companies or from US. For example, when we talk about AI, when we talk about fintech, a lot of good brands or a lot of good names are coming from United States. For example, you have Nvidia, you have a fintech stock like Visa, Master. So all of these are from United States. So according to what I just shared, how many of you are heard from any great brands or strong brands from the United States? You can type in the chat as well. What are the companies that are in a strong brands that you use of or you know of, or any AI or strong US tech companies you have heard of before? You can type them in the chat. All right, I see some question in the chat. Later on, we'll have a Q&A session. I will answer them during the Q&A session. All right, so next we'll take a look on the DeepSeek's impact on the high level side. So let's take a look on what is DeepSeek first. So DeepSeek is a Chinese AI company known for creating affordable and high performing language models. So for example, let's say you have a OpenAI in US, which is a AI model, language model as well, and we have Google Gemini as well, which is also another language models. But as we know, these two are closed source, which means that they don't reveal their source code to the public. All right, so these are closed source. And for DeepSeek, they are open source. Open source means that they share their code to the public. They do reveal their codes and how they come up with these solutions and so on. So with the DeepSeek landscape, people are concerned about whether in the past, Google and Amazon, if they invest a lot in it, and when more people are able to access to all these open source model, whether it will affect their profitability or not. So this is one of the concerns when initially DeepSeek was launched. And another concern will be, because DeepSeek was created at way lower cost compared to how OpenAI and Google train their AI models, and this spark concern about whether the demand for chips will be still there, or whether the demand of the high-end chip will be still there. But from the stock market reaction, more of the research from different news sources, and also based on our understanding. So with DeepSeek launch, it actually spark even more chip demand. I would say potentially spark even more chip demand, because more and more people will using AI. And when you use AI, the fundamental thing you need will be GPU. And be it high end or low end, people may still need GPU. It may not be a good news for Nvidia if, let's say, the requirement getting lower and lower, then the high end chip sales may be affected. But overall, if let's say we talk about the whole semicon industry, it will likely still benefit overall chip demand. All right, so what are the positive impact for DeepSeek will be increase in AI accessibility. So those companies that fallen behind in the past, for example, you can see that Apple was fallen behind in the past in terms of AI, and now they can work with Alibaba for the China market of their AI. And with DeepSeek model, we do foresee that more and more open source model will be available, and those fallen behind in the past may able to catch up with using all these open sources model. All right, at the same time also, it do help companies to reduce their costs. So as we know, if let's say as a normal company or a software company, you want to invest in AI, usually you need a lot of hardware upfront costs or a lot of capex to spend on all this infrastructure. All right, so with cheaper development costs, companies may be more afford to own AI solutions or deploy AI solutions. And also as an open source model, it may also speed up the global AI development because you are sharing your methods, and people can improve on it. People can understand more about how a good models work and so on. And this may when you share out your source code, people may improve your source code. People may come up an idea, brainstorm together. This may trigger more innovation from the market itself. And also at the same time, it do increase efficiency with the model able to run on a weaker or lower performance graphics card. This improve the efficiency. All right, so after we go through the positive impact, let's go through the negative impacts. So negative impact will be threat to established players. For example, those already invested a lot of money upfront. For example, established players like Microsoft, Google, Amazon, Meta. All these are early players, and they do invested a lot of money in the AI infrastructure hardware. So this cause concern about their profit margin, because now with DeepSeek coming out, it may able to run at the cheaper infrastructure. And also it may cause revaluation of some of the AI stocks. As we know, in the past, some of the AI stock has been dominate in the industry, and with DeepSeek coming in, the valuation of this stock may be revaluated. All right, so some of the companies you can see sell off to a certain level, but when it goes to a certain level that fulfill the valuation again, then funds may come in back again. All right, so revaluation of tech stock, AI stocks, and also this trigger people to perceive overspending by US firms. All right, so in the past, a lot of US firms has been telling how much capex they spend, how many billions they spend. So this cause perceive opinion on whether the US companies are overspending or not. And it will also likely may trigger more intense AI race between US and China. So now China are more competitive in terms of AI space. So people do see more intense competition going forward. All right, and this led to the revaluation of Chinese tech companies as well, not only in the US. So in the past, US companies, some of them are very expensive now, but some of the Chinese companies now get revaluated, and people may foresee they are cheaper now because with AI, potentially they may improve their EPS. So this do bring back confidence to Chinese tech stocks, especially some listed in Hong Kong one or China one, and this increase investor confidence. Also at the same time, any one of you that following the Chinese news or China's news, you can see that Xi Jinping also set up a meeting to meet all these private sector CEO. For example, Jack Ma also appeared in the meeting, and this actually increased investor confidence in Chinese stock as well, especially the tech stocks. So we may continue to monitor this event. However, something to take note will be the Chinese market still faces economy challenges, like I mentioned earlier. They still have the economy challenges to solve, and also geopolitical headwinds may cause some resistance there. And now the market are overstretched now. If you take a look on the stock charts, it's way overstretched. For example, Alibaba has been rallied a lot, and now we do see a sell-off these few days as well. So you may want to wait for these Chinese stocks to test the support and also stabilize at the support first before you do any planning. All right, so these are the overall DeepSeek's impact. And lastly, will be what to focus as an investor or trader. So as an investor or traders, usually we manage our risk first. So I will start with the risk first before we talk about the opportunities, because you want to limit our risk first or understand the risk first before we risk our hard-earned money. All right, so first of all, inflation trend. For the risk part, inflation trend. So worldwide, we do see that inflation still going up. US, we do see that inflation rebounded. Japan, inflation rebounded as well. Europe region also rebounded, while China still slowed down. All right, inflation still slow. So we want to see that the inflation in the US at 3% is a warning sign. So do continue to monitor the global inflation trend. And second will be the slower global growth as well. So currently, according to the GDP, China is slowing down, even though they are still having 5% GDP growth, but overall the growth rate are slowing down significantly compared to the past. And also at the same time, UK and Europe do see low GDP growth as well. So it left US alone is still seeing some economic growth, even though last year they have been having a good GDP growth indicators, or to say the good GDP growth value. But with all these trade uncertainties around, people do see more factors to affect the economy and potentially could slow down the economy. And something to take note is with all these trade policies uncertainty and also other regions slow down, companies that reporting earnings also likely will lower their earnings forecast and also lowers their earnings outlook. So you can see that according to the recent earnings, for example, like Walmart, they also lowers their outlook. I would say put a more conservative outlook, and there are a few companies do that as well, and it caused the stock to gap down. So we may foresee more and more similar conservative outlook coming from this company if global economy continue to be slow, because the CEO of the company or the CFO of the company also will not dare to commit too high outlook or too high expectation if the global economy are slowing down. All right, and this may cause some uncertainty in the market. And the other one will be geopolitical tension, trade uncertainty with Donald Trump coming in. Likely there will be lesser war, as we can see that recently they are talking about some peace talk for Ukraine and Russia. But likely there will be more trade uncertainties. For example, more and more tariff, more and more tax for foreign imports, and American first policy. This may cause some geopolitical tension or supply chain interruption. And one of the key risks will be delayed rate cut. So with inflation at 3%, the Fed may cut less or maybe no cut at all. So if let's say now the market expectation was 2 cuts for 2025. If let's say at the end of the day, when the Fed start to change their stance because of the high inflation, maybe change to 1 time or no cut, then it may cause market to correct further. And also with the tariff around, dollars may rally. However, recently dollars has been pulling back, but we may need to continue to monitor the dollar trend as well. And if let's say you see a strong dollar, it may cause US export to be more expensive, and foreign revenue will worth less in the USD. If let's say if they are listed in US, they may need to convert their revenue to US dollar, and it may report less if let's say they are making money in other region. All right, so these are all the risks. And what about the opportunities? All right, so opportunities, like I mentioned, like most of the market update we mentioned here, industries aligned with key themes are still the key focus. For example, mega trends like AI, cloud computing, big data, and also fintech. So these are the key mega trends to watch out for. Of course, now the market are expensive, it's pulling back. So it doesn't mean that these opportunities you need to go in or go in to trade these opportunities immediately. You may need to wait for a pullback to a stronger support or when the valuation is correct. And the other one will be the upgrade cycle. So AI-driven upgrade for consumer electronics still there, especially if you recently go to the shopping malls, electronic shop, you can see more and more smartphone with AI function, laptops with AI function, tablets with AI function, or wearables with all these AI functions are coming in. All right, so the upgrades may still continue when the consumer sentiment improve. And also with based on the recent Micron earnings report, they do foresee a PC market recovery in year end of 2025 with a few factors like, for example, the Windows 10 end of life, and they will force everyone to move to Windows 11, no longer support Windows 10 because Microsoft plan to end of life the Windows 10, which means that they no longer support Windows 10, and this will trigger the migration to Windows 11. So some remark here, do wait for a pullback to strong support level, do wait for the right valuations before you make any decision or do your planning. All right, and the other positive factors or opportunities will be companies significantly benefited from AI integration, especially those companies that in the past has been fallen behind. So for example, one of the example will be like Apple. In the past, they has been fallen behind in AI, but now with all these advanced Chinese models, they're able to integrate some of these models and have their iPhone to sell in China with all these AI features. And some of the company may improve their revenue significantly using AI. For example, some of the ads company, like for example, Meta, improve their efficiency a lot using AI. So these are categories belongs to significantly benefit from AI integration. And other than that, will be beyond mega caps. So outside of Magnificent Seven, or outside of the mega trends. So some of the because based on the sector rotation or the sector chart, we do see that potential short-term shift from Mag 7 or tech stock to other value sectors like consumer staples and healthcare. However, for this part, it's more suitable for traders, especially you are trend traders, or let's say investor also possible as well, because some of these consumer staple stock or healthcare stocks are still on lower valuation side, which means that their valuation are way lower than all these tech stocks. So investor also can capitalize on this rotation to enter some of the investment position into all these consumer staples or healthcare stocks. And lastly will be companies that benefit from Trump policies. So we know that Trump want to deregulate some of the regulation in the finance sector. So finance sector and fintech still one of the key opportunities there. If you're monitoring the recent pullback, you may observe that financial sector are the one that's still relatively stronger, and some of the financial stocks still holding support well. So these are potential opportunities you can look out for traders and also investors. However, some like I mentioned earlier, we do have the disclaimer. Do make sure you do your own study risk management and make sure you have a systematic way to approach the market. And this is just a 30-minute market update, and you can see I already overrun the market update because of so many events, and I want to share more with you. So if let's say you want to understand more about the stock market, or you want to learn more about the stock market, we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and safe way. We have the most systematic course in the market. We have processed that for every trading style, investing and also swing trading and trend trading. We also have versatile strategies to handle all market conditions. And we have a safe approach with proper risk management. All right, so we also have a right way to screen strong fundamental stocks. And while the market are correcting, like for example, I said potentially more pullback, then you may stand by all these fundamental great stocks. You can identify them earlier and wait for the potential setup when the valuation is right. All right, so we can use the chart to time the entry with proper money management. However, while the market is still pulling back, you need some time to practice and also pick up the skill set while waiting for the right opportunities or wait for the right timing. So get yourself ready when the opportunities come. All right, so we have a hybrid class for the workshop, which means that we have face-to-face workshop and also online workshop. So do join the 3-hour webinar to find out more. You can scan the QR code in the slide here. So the next available webinar will be on Thursday, 27th of February, 7:30 p.m. You can scan the QR code to register. So if you find the market update is beneficial to you, do recommend it to your friends. So I will now open the floor for Q&A. So any question you may type in the chat. So, okay, I see a few questions here. So first of all, in 2021 of the question, all right, so in 2025, which sector will lead the stock price upside? Again, Max 7 or tech stock, or will the strong finance sector be stronger this year? All right, so based on the current pullback, I would say we do observe that the finance sector pull back lesser compared to the overall market. And the tech stock, the Magnificent 7, yeah, even though slower this year, but I would say they are still holding certain support level, or their valuation are still on the lower side. So I don't have a crystal ball to exactly tell you which sector will be performed this year. But based on the current sell-off, we do see that some of the defensive stocks are picking up, start to reverse their trend. All right, and some of the finance stocks still holding the strong support level. So as an investor traders, how we approach this market, I would say you also don't want to ignore all these Magnificent 7 stocks at great valuation when they correct further. So you may balance some of your portfolio to have finance stocks, to have some value stocks, like for example staple stock and some tech stock. Don't 100% all in tech stocks. That will be the key planning for this year. Don't overexpose yourself in tech stock because it has been rallied for the past 2 years. All the AI stock has been on the high valuation side. So for this year, you may consider some of the finance stock or consider some of the staple stock to balance out your portfolio. All right. So I would say myself, I will put maybe mixture of tech stock and also consumer staple stock and some finance stocks to have the more stable portfolio for myself. All right. So the second question will be, for this week Nvidia earnings, is it a major mover? Yes, for Nvidia it will be a major stock market mover. So do take note of that. If let's say you have a lot of exposure in AI stocks, do manage your risk, because Nvidia itself may move the whole semicon and also AI related stocks itself. Because when Nvidia, let's say they give not so good forecast, it may cause the market to correct further, or if they beat the earnings strongly and give very good outlook, then the market may continue its momentum or may recover from this sell-off. So Nvidia earnings, yes, definitely is a major market mover, and with a lot of AI stock now at the high valuations, and recent days we do see some of the AI stock has been selling off. This is an important earnings to take note. All right, so Nvidia. And the third one, how about Taiwan stock market performance? Total growth 182%, average return 10.9% per year. All right, so for Taiwan stocks, I'm not so familiar with Taiwan, but I would say one of their key companies will be TSMC from there, the Taiwan Semiconductor Fab there. So TSMC will be the key companies, and they do provide a lot of support to all the whole industry chain in Taiwan. I would say they are one of the world-class or world number one fab from Taiwan. But Taiwan do have very serious geopolitical headwinds, or I would say geopolitical uncertainties, because as we know, China want to reunify with Taiwan. All right, so when does it happen, we don't know. Or will it happen peacefully, or will it happen in ugly ways? Seriously, I don't know, because this is one of the sensitive topic in geopolitical side. And if you invested in Taiwan, make sure you take note of that risk as well, because even though there are great companies there, but it do expose to very strong geopolitical events, especially the part that where around the Taiwan Straits there, where the China planning to reunify with Taiwan some days according to their national plan. All right, so this is what I can answer for now about Taiwan market. All right, even though you see great companies there, geopolitical wise is having a higher risk compared to the rest of the market. All right, so with that, I answered all the questions. And if you find this market update is useful for you, you may introduce it to your friend as well. And we do see more of you continue to join this monthly market update. All right, so with that, we're coming towards the end for this market update. So hope you guys do well in the stock market and may you guys prosper in your investment as well. All right, so goodbye everyone and see you next month. All right, bye-bye.